Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial world and uncover the secrets buried in corporate filings. Today we're diving into a very interesting report from 12C's investment company Third. It is about their big debut into the public market. Let's see what this means. Before we jump in, if you love getting straightforward insights from these documents, hit that subscribe button. And hey, we've built a fantastic Discord community where we break down these filings together. Link is in the description. This report is essentially a company's announcement about a major event. For 12C's investment company, the Third, the really big news is their initial public offering, or IPO. Think of an IPO as a company selling its shares to the public for the very first time. It is a massive step for any business. This report is dated the 15th of December 2025. This is the day the company went public. It is the official start of their life as a public company. The company's name is 12C's investment company, the Third. It is being incorporated in the Cayman Islands. This is quite common for these types of investment vehicles. They've got a commission file number and an IRS employer identification number. These are like official IDs for the company. This number here is the IRS employer identification number. It is basically the company's social security number for tax purposes. So on the 15th of December 2025, 12C's investment company Third officially became a publicly traded company. This is the big one. They sold a lot of shares to the public. They sold over 17 million units. A unit is not just one thing, it is usually a package. In this case, each unit comes with one share of the company's stock and a right to buy more stock later. It is like a bundle deal. They sold these units for $10 each. That brought in a huge amount of money, over $172 million. This is the money the company raised from the public to fund its operations or future plans. Alongside selling shares to the public, they also did a private sale. This means they sold shares directly to specific investors. These sales usually happen at the same time as the IPO and often involve the company's founders or early investors. They sold close to 500,000 of these units in this private sale. It is a smaller amount compared to the public offering, but still significant. A good chunk of these private units went to 12C Sponsor LLC. This is likely the company's own sponsor or holding company. It makes sense that the people behind the company would be investing too. All the money raised from both the public offering and the private sale is being held in a special trust account. This is common for IPOs, especially for companies that are going to use this money to buy other businesses. The amount is over $172 million and every unit sold for $10. Some of this money includes deferred payments to the underwriters who help them sell the shares. This confirms the total amount of money raised. It is $172.5 million and each unit was priced at $10. This is the money the company now has to work with. They've provided an audited balance sheet. An audited balance sheet is like a financial snapshot of the company on a specific date, showing its assets, liabilities, and equity. This is a key document to see how the IPO has impacted the company's financial standing right away. This is where we find the attached documents. The crucial one here is Exhibit 99.1. This exhibit is the audited balance sheet as of the 15th of December 2025. This is our window into the company's immediate financial health after the IPO. This is the company signing off on the report. And here we have Dmitry Elkin signing as the Chief Executive Officer. He is the top executive. So Dmitry Elkin is the CEO and he is putting his name on this document. Now let's talk about what this IPO means. 12C's investment company Third is a type of company often called a special purpose acquisition company, or SPAC. SPACs are essentially shell companies created to raise money through an IPO with the sole purpose of acquiring another company later on. They don't have existing operations or products. Their business is to find and merge with a private company, effectively taking that private company public without the traditional IPO process for the target company. The biggest number here is the $172.5 million raised. This capital infusion is the lifeblood of a SPAC. It is what they will use to fund their search for an acquisition target, and then the acquisition itself. The fact that they sold all their units at $10 each and even exercised the underwriter's option to sell more units shows strong demand from investors. This is a positive sign for the company's initial fundraising. One notable aspect is the sponsor and the underwriter's involvement in the private placement. This shows confidence from the insiders and the lead financial institutions orchestrating the IPO. It usually means they believe in the company's ability to find a good deal. The key risk for a SPAC like 12C's investment company, the Third, is finding the right acquisition target within a specific time frame. SPACs typically have about 2 years to complete a merger. If they fail to find a suitable company and merge, the money is returned to the investors, and the SPAC essentially dissolves. Also, the market for SPACs has been volatile. While this IPO seems successful, the subsequent performance of the company will heavily depend on the quality of the business they eventually acquire. So in a nutshell, 12C's investment company, the third, has successfully raised a substantial amount of money to pursue its goal of acquiring another business. The immediate financial picture after the IPO looks strong with a significant cash balance. However, the real test will be their ability to execute a successful acquisition that creates value for their shareholders. The success of this venture hinges entirely on their management team's ability to identify and merge with a promising private company. What is your take on SPACs and this particular IPO? Do you think they are a good way for companies to go public? Let us know your thoughts in the comments section below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more in-depth corporate analysis. And don't forget to join our thriving Discord community for more discussions and insights. Thanks for watching, and we'll see you in the next one. Goodbye.